3M, ticker symbol MMM. I own it. I love it. It's my number 10 favorite stock, dividend stock of all time. Today, with their earnings release, 3M dropped 13% in a single day. And so I'm on Twitter. I'll link to it in the description below. I have a lot of subscribers who are also on Twitter, and they're sharing their thoughts. I know a lot of folks in the community are thinking about buying 3M right now. Some folks have already started doing so. And so I wanted to share my personal opinion today on 3M. Am I buying it now? Am I not buying it now? What do I think about the earnings report? Why is it dropping so much? In fact, this is the biggest single day drop that 3M has faced since October of 1987. This is a really big deal for 3M. I just want to share my insights with all of you today. It's going to be a great video about dividend investing, so let's get started. All right, everyone, I'm just going to jump right into it. I do not have my whiteboard today, but I do have my laptop. I jotted down a lot of notes here, and so I'm going to do my best to summarize these notes in the description below. I'm in a bit of a time crunch today, so I just wanted to go ahead and film this video in real time because this is happening to 3M in real time. So at a high level, I just did a video, I'll link in the description below, about some recent earnings reports, and it was actually highlighting 3 stocks that I own that did reasonably well given the earnings reports that came out. They did well. Stocks are on the ascendancy. By contrast, 3M reported their earnings today and the stock plummeted. And so this is an interesting compare and contrast to the last video, so check out the last video if you have not already. Anyways, with 3M, one thing worth noting is the share price. It is down 12.95% in a single day. It's now down to $190.72. Now, this may seem really cheap based on the current trading range, the recent trading range, but please keep in mind that I bought 3M at this level and lower in 2018. In 2018, 3M was at certain points trading at this level. So this level, in my opinion, is not a bargain basement yet. In fact, it was trading at this level in 2018 when everyone thought that the company was earning more money than they're now indicating. And so my high level take is I think there's more downside there, and I am saying bring it on. Please, please, it is so hard to find value in this stock market. So I'm very excited to hopefully be able to accumulate more shares of 3M throughout 2019. This would be a dream come true because I really want to build my position in 3M. Anyways, the current dividend per quarter, this is a channel about dividends after all. I plan to live off of dividends and cash flow. The dividend per quarter is $1.44. If I multiply that by 4, I get $5.76. Now, if I take the $5.76 and I divide by the current share price of $190 and change, I actually get a starting yield on 3M of 3%, 3.02%. I want to point out that this is pretty rare. Typically, the starting dividend yield for 3M is in the 2% range. So to see it just above 3%, to me, this is a little bit of a buy signal. Now again, I don't feel it's at a value bargain basement price yet. We'll get to this more in a minute, especially based on the current or the forward 2019 PE ratio based on the range they gave. But I certainly think from a dividend standpoint, 3% starting yield on 3M, that is kind of rare. So it's an indication to me that, hey, Ian, maybe it has more to fall. I sure hope it does. This yield already tells me that, hey, things are going to be good from a long-term investing standpoint, from a dividend investing standpoint. Remember, I like it when stocks go down because when the stocks I love go down, the starting yield goes up as long as I believe in the long-term fundamentals of the company. Now, we'll get into that because 3M had a pretty poor earnings report, and so a lot of people are questioning the fundamentals of 3M. I'll tell you, I'm not concerned in the least. I'm not concerned in the least, but there are some people concerned about this. So I want to move on here. One thing that tells me that this company is going to do just fine is this company just raised the dividend. Literally in November of 2018, the dividend was $1.36 per quarter. Now, as of the dividend they paid in February of 2019, it went up to $1.44. So they raised the dividend recently, very recently, by 5.88%. Now, if the management team at 3M were not confident in their business, they did not think that the business was going to thrive, they did not think that the business was going to be okay through all this, they wouldn't have raised the dividend that much. Now, this company, they have a track record of raising the dividend. I don't think they want to go a year without raising it, but they could have raised it 1 penny. You know, they didn't have to go so aggressive as to raise it by almost 6%. And that alone tells me that, look, management understands that there's some cyclical stuff happening here, but I think they're pretty confident in the business. Now, I'll tell you, this is really important. I want to plant a seed here. 3M is a very different kind of company than the bread and butter kind of consumer non-cyclicals that I talk about. In my last video, I shared some information about Kimberly-Clark. In terms of full disclosure, I am long Kimberly-Clark, ticker symbol KMB. Also, in terms of full disclosure, I am long 3M, ticker symbol MMM. Anyways, Kimberly-Clark, whether the economy is good, economy is bad, whatever, everyone needs to buy diapers, and people are going to find a way to buy those diapers who have kids because they can't forego it. Now, 3M, by contrast, is really tied to industry. They are tied to airplane production. They are tied to electronics production. They are tied to industry. And industry has fluctuations. There's a lot of fluctuations, especially in B2B products, but even B2C. These guys make the components that go into screens for smartphones, for example. And look, in a bad economy, the consumer is going to wait on their smartphone purchase. Do they need to buy the newest $1,000 smartphone, or can they wait? Are they going to forego buying diapers? No, but they could forego buying smartphone. But thinking about from the aerospace industry, is a airplane company, a airline carrier, are they going to forego ordering new aircraft during a bad economy? Yes, they're going to probably wait until a good economy to upgrade their fleet. And so 3M is tied to all that, to the B2B side of things. And so what I'm trying to say is this company will never just be up and to the right. 3M is the type of company that will face cyclical downturns, cyclical upturns, and I think we're starting to see a bit of a cyclical downturn. I spoke in a previous video how I think the crash is coming. I'll link in the description below. I have more recent data as well that really tells me, Ian, be careful here, tread with caution, this market is really pricey, it's probably going to correct. I think we're seeing some of the leading indicators here through a bellwether like 3M that, look, it's probably coming. A downturn is coming. And so I think the economy just goes through cycles, and that's what we're seeing with 3M. But it's not a bad thing. They've lived with this since the beginning of the company. And so just something worth noting. Now, they did slash their annual profit forecast. And so this, I think, is what really had the company tumbling today. The fact that they came in and they said, look, this year we're not going to earn as much as we thought. So I'll get to that in a minute, but it'll be interesting. I'll share actually how much they plan to make this year. They cut 2,000 jobs, or they have plans to cut jobs, cost cutting, and they're citing a very weak automotive and electronics market. Now, in addition, what's interesting is across 5 of their business units, all 5 business units, they're seeing operating income drop. So again, this is a broad-based decline at 3M. They're seeing this issue across the company. It's cyclical in nature, in my opinion. It's tied to the economy, in my opinion. I don't think this is a company-specific issue. And that's the thing. I would lose confidence in 3M if I thought the company was not being managed properly. The company was facing specific issues. But in reality, this is an industrial company. Industrial companies are cyclical by nature, and we're seeing some cyclicality here. That's what I am seeing. And what's great about cyclical companies is in the cyclical downturn, oftentimes there are amazing opportunities for long-term investors like myself who want to buy for the long-term dividends. So I want to share some figures now. The earnings per share came in at $2.23. By comparison, the analysts expected $2.48, and they actually earned $2.50 a year ago. So the analysts already expected some cyclicality here. They already expected the company to kind of come in weak, but they came in weaker than expected. And so the EPS, earnings per share, was actually down 10.8% year over year. And so that's pretty big. That's worth noting as an investor. Is certainly an element of risk here. But I've always found as a long-term investor, if I buy when there is an element of risk, It's usually a better buying opportunity than when there's no risk in the market at all. So sales dropped as well. They dropped by 5%, and they updated their range. The range that they were giving before for 2019 is they said they were going to earn between 1045 and 1090 for the year. They actually dropped that down to 925 to 975. Now, that's a pretty big drop. And so here's what I did. I'm just going to assume the worst. I'm going to assume they come in at the 925, which is the bottom of the new range. If I take the current share price, the $190 and change, I divide by the 925, I get a forward PE, a PE for 2019, somewhere in the 20.6 range. So 20.6, that's okay for 3M. Now, certainly I've seen 3M trade higher, but for it to be a real value, a bargain, I would like to see that PE down at like maybe a 17, 18, maybe even a 16. And so what I'm saying here is based on a starting dividend yield of 3%, I think that's indicative that, look, it's started to correct. It's nice. It's rare to get a 3% starting yield on 3M. That being said, this is the beginning of something, in my opinion, for not only 3M, but for the economy. It may take years for all of this to pan out, but we're seeing something happen here. And so what I'm saying is the PE is still kind of high. It's still at a 20. I think this thing has more room to go down. And so what am I going to do? Personally, I like to average down, average up. I'm always buying. And so 3M, I'm probably not going to buy just yet, but if I see it trend down more, I'm going to start averaging in. And I'm going to keep averaging in as long as it goes down because I'm a long-term investor for dividends and cash flow. I want to build my position in 3M, and by averaging in over time, I know I optimize my buy price. So the payout ratio, one thing I want to point out as well is people start thinking, oh my goodness, these guys cut their forecast for the year. Now, Ian, are they going to be able to sustain this dividend? So what I like to do is I like to look at the payout ratio. And so I take the current dividend of $5.76 per year. I divide by the low end of their new range for earnings per share, which is $9.25. I get a payout ratio of 62%. So 62% payout ratio, in my opinion, is totally sustainable for 3M. And I don't see any risk of the dividend getting cut. They have more than enough earnings coming in to cover the dividend. Now, I would say that they're probably not going to raise it as quickly in coming years as they have. In recent years, they've had some massive increases. I think we'll have to wait till the next economic cycle when they kind of recover from this cyclical decline to raise the dividend as aggressively again as they did in recent history. But I think raising the dividend each year somewhere between 3 and 5%, I think that would be reasonable. I think we'll see that even during the downturn, and I see that they have more than enough funds to support the dividend. And here's what I like to do. A lot of investors here on this channel, they are newer to investing or they haven't been through the last downturn. I'm going to tell you when the market tanks, it does get a bit scary. And so one of the tools that I always like to employ as a long-term buy and hold investor is I honestly don't place too much weight on these quarterly reports. I look at the annual reports. And even today, I looked at the annual report for 3M for 2018, and I just looked at their 5-year plan for 2019 through 2023. They are trying to grow their earnings per share by between 8 and 11% per year. They're trying to do organic sales growth between 3 and 5% a year. So I like to take a step back. I like to just look at the big picture, and their plan looks pretty darn good. Yeah, they had a bad quarter. I think they're going to have a bad year. They may have a bad few years here, but I think the strategic plan at a certain point is going to pan out. Long-term debt is only $13.4 billion. That is pretty low given the scale of this company. They have a 21% operating margin, and they have a 16% net margin. Again, this is from the annual report from the 2018 numbers. And so I like to oftentimes when I see this type of activity, like one of my favorite stocks down 10% in a single day, these days I don't even care. I just look at that with a smile. I love it. It creates an opportunity. But let's say this continues. Let's say the thing at a certain point's down 50%. That might catch the attention of certain investors, and certain investors who haven't been through corrections before, that may be a little bit scary. For me, what I like to do, one, average in, because I know it's going to correct back up at a certain point. It's going to adjust back upwards. And so I take the opportunity. I enjoy the opportunity. I go for it because I know those opportunities allow me to reach FIRE, financial independence, retire early, quicker. I'm going to live off of dividends. I can do that quicker if I take on a little bit of risk and I buy when stocks are plummeting. But the other takeaway just of all of this is I take a step back, I look at the annual reports, and I take confidence that I made good, sound investment choices. And I know that at this point, a lot of these things are not particularly under this company's control, but they're going to do what they can. Oftentimes downturns, they're good for these companies because they allow them to kind of button up their operations. They allow them to become more efficient so that when the next upturn comes, they emerge even stronger. And so a good downturn, oftentimes, in my opinion, for a company like 3M or any other company, it can be advantageous for a long-term holder, not only for optimizing buy prices, but just knowing that the management team is being put through a difficult time, creates character, and it allows them to optimize their business. So I'd be curious out there. That's my take on the 3M drop that we all saw today. Like I said, I'm not quite a buyer yet, but where would I be a buyer? If it starts getting into the low 180s, high 170s, I'm going to start averaging in there. And I think it will. I think it could hit those levels just because, like I said, the news was pretty bad and it hasn't even corrected back to some of the recent low points we saw in 2018. And certainly when it was at those low levels in 2018, that bad news wasn't out yet. And so I think we're going to see some opportunities here, and I'm excited about it because if you've been following my channel, there's just not a lot of opportunity I've been seeing lately in the stock market for long-term dividend investors just because everything's been bid up. It has to correct. Now, one other point I want to make today is a lot of people ask me, Ian, why don't you invest in exchange-traded funds? This is why I don't do it. The reason is I highlighted a few stocks in my last video that are doing really well right now, and I just don't want to buy them. I'm happy that the earnings are good, but they've just been bid up so much I can't rationalize buying here. But at the same time, I have a stock in my portfolio that's finally correcting, that I love, that I'd like to buy more of, that fits into my strategic goals this year of sticking to my top 15 favorite stocks, and that is 3M. And so I get a cherry pick. I got to say, hey, I'm not going to buy the stuff that's going to up and to the right. I'm going to buy the one that's correcting 3M, and I'm going to cherry pick that stock. Now, if I were an ETF investor, by contrast, I just have to buy the whole basket, the good stuff and the stuff that's corrected at the same time. So I never get to cherry pick the best values at any given time. And so that's why I like investing in individual dividend stocks, or at least one of the reasons. And like I said, I'm probably going to take this opportunity to average into some 3M, especially when that PE ratio as well. The stock corrects enough that the PE ratio looking forward for 2019 is somewhere in that 16, 17, 18 range. It gets down to 16, I'm all over it. I'm going nuts, backing up the truck to buy more 3M. Anyways, thank you for watching today's video. Sorry I don't have my board today, but I hope that this was a good video for everyone in real time, sharing real-time insights on 3M and the drop that they are facing. Please share with the community in the comments section below what you think about 3M. Is it a stock that you like, dislike? Are you buying, not buying? Are you buying now? Are you waiting? If you are waiting, what do you think a good entry point is? What kind of entry PE ratio or entry price would be something attractive to you? We have a thriving community here, 25,000 dividend investors strong. I am so blessed. I love you guys. I thank you guys. This is dividend investing, long-term investing, thug life investing, and you know the true thugs are buying stocks when there is risk out there, because a thug doesn't worry about risk at all. And so anyways, I will see you guys in the next video. Before I do that, a quick disclosure. In terms of full disclosure, I own the stocks mentioned today. I am long 3M, ticker symbol MMM, Kimberly-Clark, ticker symbol KMB. I own those two stocks in my portfolio. In terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Literally just sharing my journey here on YouTube for fun and entertainment. If you want to support my channel, please subscribe and turn on that notification bell. I would really appreciate that. It means the world to me. I love you guys. I will see you in the next dividend investing video.